Welcome to our companion podcast on important family business matters, Family Business Briefs, with our AI hosts, Jen and Ted. The content in these episodes comes directly from Family Enterprise USA and can be found at familyenterpriseusa.com. As we all know, many issues like taxes, economic policies, and new legislation affecting family businesses are complex. So, with the assistance of AI and our AI hosts, Jen and Ted, this technology helps make sense of it all in a brief, clear, and lively discussion, and all in about 10 minutes. We hope you find the information presented here useful and entertaining. Now, let's listen in on this episode's important family business topic.
Welcome back, everybody. Today, we're going to be diving into proposed tax legislation, and specifically how it could impact family businesses.
Yeah.
We've got this article here by the president of Family Enterprise USA, which is an advocacy group. And what's really interesting about it is they've been talking directly with congressional staff who are actually working on this legislation.
Oh, wow.
It's like we're getting a little sneak peek behind the curtain.
That's awesome. Yeah. This is a great resource for understanding the perspective of those family businesses.
All right.
And what they're hoping to see, from lawmakers.
For sure. And the first thing that jumped out at me was just how much these businesses value consistency, especially when it comes to tax policy. It's not just about next quarter's profits, right? It's about planning for the next generation and beyond.
Absolutely. And, unlike publicly traded companies that might focus on short-term gains.
Right.
Family businesses are often thinking decades ahead. They need to know what the tax landscape will look like, when they pass the business down to their children or grandchildren. Imagine trying to make investment decisions or plan for succession when the tax rules could just change drastically overnight.
Oh, gosh.
It would be incredibly difficult.
Yeah. That makes total sense. And it sounds like Congress is at least getting that message,
Right.
This article mentions Pat Soldano, who's the author of the article, and she was speaking directly with staff from the House Ways and Means Committee tax teams.
Wow.
These are the folks who really shape tax legislation.
Yeah, this is significant because it shows that lawmakers are at least listening to the concerns of family businesses.
Yeah.
I mean, the staff even emphasized their commitment to creating a tax code that provides that much needed certainty.
Right.
But as with everything in Washington, there's a balancing act.
Right. They can't just hand out tax breaks without considering the bigger picture.
Exactly. One of the biggest concerns is the potential impact on the national debt. Some estimates suggest that these proposed changes could add over $4 trillion to the deficit.
Gosh.
That raises some serious questions about fiscal responsibility.
Right.
Which basically means making sure that the government is managing its finances in a sustainable way.
So it's about finding that sweet spot between supporting businesses and not, bankrupting the country in the process.
That's a good way to put it. It's a complex issue, and there are strong arguments on both sides.
For sure. For sure. Okay, let's break down some of the specifics.
Yeah.
This article dives into the estate tax.
Okay.
Which is often called the death tax because it kicks in when someone passes away. It seems like this is a major concern for family businesses.
It can be, yeah.
So what is the estate tax exactly?
Well, the estate tax is a federal tax on the transfer of property after someone dies. Currently, there's an exemption level of $13.6 million per person.
Okay.
Meaning you only pay estate taxes on assets exceeding that amount. But that exemption is set to decrease significantly if Congress doesn't act.
Oh, wow.
Potentially going back down to around $7 million.
So a lot more family businesses could be hit with this tax.
That's right.
And we're not talking about a small percentage here.
No.
The federal rate is 40%,
Right.
and then some states pile on even more, right?
That's right. Some states have their own estate taxes on top of the federal tax.
Wow.
Which can push the total rate even higher.
So you can see why this is a big concern for family businesses.
Absolutely.
They're worried that a huge chunk of their assets could end up going to taxes, potentially forcing them to sell off parts of the business or even shut down entirely.
Yeah.
That's the scary thought. It's
Yeah.
not just numbers on a page.
Bro.
It's people's livelihoods and legacies at stake.
Absolutely. And that's why there's so much focus on potential legislation to address this.
Right.
One proposal, H.R. 6.1, aims to reduce the estate tax burden.
Okay.
And what's interesting is that it has bipartisan support. Both Republicans and Democrats have signed on as co-sponsors.
That's pretty rare these days. It shows how important this issue is.
Yes, it does.
Okay, so a state tax check. Another big point in the article is the issue of pass-through entities. Now, I'll admit I'm not a tax expert, so can you break that down for me?
Sure. Pass-through entities are a common structure for small and family-owned businesses.
Okay.
It basically means that the business's profits and losses are passed through to the owner's personal income taxes. They're taxed at the individual income tax rate rather than the corporate rate.
So it's like the business itself doesn't pay taxes.
Yeah.
The income just flows through to the owners.
Exactly. And according to the article, over 80% of family businesses are structured this way.
Wow, okay, but it sounds like there's a potential disadvantage here.
There is.
Really catch.
Well, the current corporate tax rate is 21%.
Okay.
Individual income tax rates, especially for higher earners, can be significantly higher, potentially hitting 43% next year for some pass-through business owners.
Oh, gosh.
It creates a situation where some family businesses are facing much higher tax bills than large corporations, which doesn't seem very fair.
No, not really. Okay, that makes sense. So what are lawmakers doing to address this disparity?
Well, in 2017, the Tax Cuts and Jobs Act, or TCJA, tried to level the playing field a bit by introducing Section 199A.
Okay.
This provision allows pass-through businesses to deduct 20% of their qualified business income, reducing their overall tax burden.
Okay.
It was a big win for family businesses at the time.
So it sounds like Section 199A was a step in the right direction. But is there a catch? It wouldn't be tax policy without a catch, right?
You got it. The catch is that Section 199A is set to expire.
Oh, no.
And as you can imagine, family businesses are understandably anxious about losing this deduction.
Yeah, I bet. So basically, it's like a ticking time bomb for these businesses, who are relying on this deduction.
Yeah.
What's being done to try and make this permanent?
Well, that's where the Main Street Tax Certainty Act comes in.
Yeah.
It's a bill introduced by Rep. Smucker and Sen Daines, and it aims to permanently extend Section 199A.
Okay.
And get this, it has massive bipartisan support.
Real?
With 152 co-sponsors in the House alone.
Wow, that's impressive. It sounds like there's a real sense of urgency to get this done.
Absolutely, Rep.
Yeah.
Smucker has been very vocal about the need for equity in the tax code.
Right.
He said, when small businesses thrive, our communities thrive.
Yeah.
And he didn't mince words about the potential consequences if these provisions expire.
Right.
Warning of an immediate and massive tax hike for family businesses.
Yikes. That paints a pretty stark picture.
Yeah.
It makes you wonder, with all these potential changes to the tax code, how can family businesses even plan for the future?
Yeah.
It seems like they're constantly having to adapt to shifting sands.
You hit the nail on the head. This whole discussion really underscores the importance of consistency for family businesses. Remember, they're often making decisions that impact multiple generations, not just the next fiscal quarter.
Yeah.
Unpredictable tax policies make it almost impossible to make those long-term plans.
It's like trying to build a house on a foundation that could crumble at any moment.
Exactly.
I can see why they'd be pushing so hard for stability.
And that's why the permanency aspect of the Main Street Tax Certainty Act is so crucial.
Yeah.
By making these tax benefits, permanent lawmakers could provide that much-needed reassurance, encouraging family businesses to invest and grow with confidence.
So it seems like a win-win, right?
Yeah.
Businesses get the certainty they need, and the economy benefits from their growth.
Exactly.
But I can't help but think back to that $4 trillion figure.
Yeah.
Wouldn't making these tax cuts permanent just exacerbate the national debt problem?
That's the million-dollar question, isn't it?
Right.
And it's a valid concern. There's no doubt that extending these tax cuts would have a significant impact on the national debt.
Right.
It highlights the complex trade-off between providing relief for businesses and maintaining fiscal responsibility.
So how do we reconcile these competing priorities?
Yeah.
Is there a way to support family businesses without sending the national debt spiraling out of control?
It's a tough balancing act. Some economists argue that the economic benefits of tax cuts, like increased investment and job creation, will ultimately outweigh the costs.
Okay.
Others are more cautious, warning that excessive debt could lead to higher interest rates and slower economic growth in the long run.
So there's no easy answer. It's about carefully weighing the potential benefits against the risk, both in the short term and the long term.
You got it. And it requires a nuanced understanding of both economics and politics. Ultimately, it's up to lawmakers to make these difficult decisions.
Yeah.
But it's important for all of us to be informed and engaged in the debate.
Yeah, this deep dive has definitely given me a lot to think about. We've talked about the need for consistency,
Yeah.
the potential benefits of tax cuts for family businesses,
Right.
and the concerns about the national debt. But I think it's easy to forget that there are real people behind these policy decisions.
I agree. It's important to remember that we're not just talking about abstract economic concepts. We're talking about the livelihoods of families and the vitality of communities.
Exactly. We're talking about multi-generational businesses, dreams built from scratch, legacies passed down through families. These businesses are woven into the fabric of our towns and cities.
And that's why I think the work of advocacy groups like Family Enterprise USA is so important.
Yeah.
They're giving a voice to these businesses, ensuring that their perspectives are heard in Washington.
They're not just lobbying for lower taxes, they're advocating for policies that support the long-term health and sustainability of family businesses.
Right. They're educating lawmakers, providing data, and sharing real-life stories of how tax policy impacts these businesses and the communities they serve.
It's a reminder that we can all play a role in shaping public policy. Whether it's supporting organizations like Family Enterprise USA or simply staying informed and engaging in the debate, our voices matter.
Absolutely. It's not just about leaving it to the politicians.
Right.
We all have a stake in creating a tax system that supports both family businesses and the nation's economic well-being.
Speaking of shaping the system, I'm curious, with all the competing interests and priorities, what do you think is the biggest challenge facing lawmakers as they try to reform the tax code?
Well, that is a great question. And it's one that does not have an easy answer.
Right.
I think one of the biggest challenges is finding a way to create a tax code that's both fair and sustainable. It's a balancing act that requires a lot of careful consideration.
I like that, fair and sustainable. Can you unpack those terms a bit?
Sure.
What do they actually mean in the context of tax policy?
Well, fairness means ensuring that everyone contributes their fair share, that the burden of taxation is distributed equitably across individuals and businesses. It's about creating a system where no one group is unduly burdened or unfairly advantaged.
Yeah.
Whether that's a giant corporation or a mom and pop shop.
So no free riders, but also no scapegoats.
Exactly.
It sounds like a delicate balance.
It is. And sustainability in this context means creating a system that can generate enough revenue to fund essential government services without jeopardizing long-term economic growth.
Right.
It's about finding a balance between meeting our current needs and ensuring that we're not saddling future generations with an unsustainable level of debt.
So it's about finding a way to pay for the things we need today.
Yeah.
Schools, roads, defense, without compromising the ability of future generations to do the same.
Precisely. And that's a tall order.
Yeah.
It requires lawmakers to think about the long-term consequences of their decisions, not just the immediate political wins.
This deep dive has really highlighted how interconnected everything is. Tax policy, family businesses, the national debt, the future of our communities. It's not just about numbers on a spreadsheet. It's about people's lives.
Absolutely. And that's why it's so important for us to be engaged, informed, and to participate in these conversations, whether it's through voting, contacting our representatives, or supporting organizations that align with our values.
Yeah.
Right. We all have a role to play in shaping a future that works for everyone.
Well said. This has been an incredibly eye-opening deep dive.
It has.
We've explored the complexities of tax legislation, the unique challenges and opportunities facing family businesses, and the importance of finding that delicate balance between fairness and sustainability.
We have.
And we've also seen the power of advocacy and the impact that organizations like Family Enterprise USA are having in Washington.
For sure.
They're fighting for policies that support family businesses and ultimately the health of our economy.
Absolutely.
And it's a reminder that we're not just passive observers in this process.
Right.
We can all make a difference by staying informed, engaging in the debate, and making our voices heard.
Exactly. It's about being active participants and shaping the future we want to see.
Well, folks, we've reached the end of our deep dive. We hope you found this discussion insightful and engaging, and we encourage you to continue exploring these issues, asking questions, and sharing your own perspectives. After all, the future of our economy depends on all of us. Until next time, keep those brains buzzing.
Family Business Briefs with Jen and Ted brings Family Enterprise USA's and Policy and Taxation Group's original insights to life using new AI technology for a more engaging experience. While core information remains true to the source, some nuances may vary. We hope you enjoy this innovative approach and join us for the next episode. If you like this podcast, please subscribe by hitting subscribe.